Hey, John Stevenson here, the Guaranteed Retirement Guy. And today I want to compare some fixed annuity rates and really see which one is the best for you. Everyone has a different time horizon. So fixed annuity rates, or what we call MYGAs, are fluctuating all the time. Typically, we're seeing them change every couple of weeks, sometimes at the beginning of the month. It really depends. You can also find a lot of times you can look on Annuity Rate Watch, and you'll be able to see rates there. If you go to my website, you'll also be able to check out the rates there as well. So usually under my resources tab, you'll see search annuity rates or search annuities, and you'll be able to look at either income annuities, or you can look at guaranteed accumulation for fixed annuities. So if you want to keep tabs on that, I do have a place on my website that allows you to see it real time. I'm going to look at everything. Typically when I look at MYGAs, I'm usually showing you 5 to 10 years because those are usually the best ones. Those are the ones that will give you the most growth, and it seems to be the sweet spot. Anything below that or above that is lower. But I'm going to show you everything on this video. I'll show you the 1 year. The 1 year Clear Spring is paying you 4.15%. That's 1 year, okay? And gives you interest only in the first year if you want it, and of course 10% year 2, but this is just for 1 year. So if you did let it sit after the 1 year, after it matured, it would continue to earn interest. It just wouldn't be at the 4.15. It's probably be more like 1 or 2%. Okay, then the 2 year is Ocean View, Americo, and Clear Spring. Those are the top 3. And now we're moving into the 5s, 5.65, 5%, 4.35. And then you'll notice that Americo here in the middle only has a free withdrawal of 3%, so not very much. And then Harbor View, the one with Ocean View, they don't give you anything the first year, but after that you can take up to 10% out. Okay, the 3 year, you got Safe Harbor, you got the Personal Choice, and then you've got Clear Spring. So you got 2 B++s that are paying you some decent amounts. The simple interest though is not compounded, so just remember that. You'll notice that on the Safe Harbor. That's why you'll notice, even with the Personal Choice, that one that's compounded, it's just a hair below as far as the growth. I mean, you get 595,000 and 595,508 versus 595,750. So, anyways, that's why I usually like to look at longer term, because these shorter term ones just don't give you very much. The 4 year top annuities is Clear Spring, Americo Financial, and Ocean View, and you can see those rates range from 5.7 to 5.85. And guaranteed ending value, if you decided to do Clear Spring at the end of 4 years, would be $627,673. So, and then of course, the free withdrawal rates looks like that is pretty generous with Clear Spring and Americo. It's only 5% free withdrawal, and Harbor View doesn't give you anything the first year, and then 10% after that. So the 5 years is when things really start to look interesting. You're looking at, most of these are in the 5. I mean, I guess Royal Neighbors is 5.8, but still, they're all looking pretty good as far as 5 year lock-in, 5.9, 5.95 for the Clear Spring and the Americo. And again, the same type of withdrawal rates that we saw before. You're just locking in a little bit higher rates for longer. And then it looks like about the same rates for the 6 year, and with Americo, Clear Spring, and Ocean View being on the top, and all of them paying around 5.9. For the 7 year, we're looking at 5.95 as the top one, and then 5.85, 5.8 for Clear Spring and Nassau. So this is the first time we're seeing Nassau on this list, anyways. Let's see if they might be in the future ones, but Nassau, I haven't seen them very often as far as being competitive with the MYGAs. 8 years, now you've got Equitrust paying 5.9, Clear Spring paying 5.85, and Multi-Select paying 5.55. They all provide interest only, except Clear Spring and Oxford also give you 10% on years 2 through maturity. Okay, now let's see. The 8 years, and got 9 years. Now you'll notice the what they're paying you is a little bit less, not the 5.9 anymore. Now it's 5.8, 5.6, and 5.45. The withdrawal rates aren't too bad. Interest only for Oxford and Clear Spring, and then 10% the year after that. And then Annuity just gives you 10% straight off the cuff right in the beginning. So, and that's the first time I've seen Annuity here in a while. They were on the top back when rates started going up, but Now we just haven't seen them very much being very competitive. Okay, for the 10 years, Equitrust is paying 6%, still paying 6%. We'll see how long that lasts. And then we've got Royal Neighbors paying 5.85, and then ClearSpring paying 5.8. So keep in mind, Equitrust and Royal Neighbors is only giving you interest only during that 10 years. So if you lock it up for 10 years, you're only getting interest only. Anything above that is subject to the surrender charge. Okay, so if you do think you're going to take out more than the 6% or 5.85, you probably should choose ClearSpring so you can have a little bit more flexibility for the 10% withdrawal rate after year one. All right, 15 years, Upstream Life. They are guaranteeing at the end of 15 years, your $500,000 will be worth $995,796. And they will guarantee you a 4.7 compounded interest for 15 years. So that looks pretty nice. And then, last but not least, the 20-year Safe Haven. Your $500,000 is guaranteed to be worth $1.3 million at the end of 20 years. Quite a while to wait, but there you go. And here's the other thing. They don't even give you a free withdrawal. That's kind of a bummer. So you take anything out during the 20-year period, they're going to penalize you. So these are very long-term instruments. They're putting like 20-year bonds. So you take it out, they're going to lose money, and they're going to pass it on to you through the form of surrender charges and maybe even possibly an MVA charge, which stands for market value adjustment. And that just depends on the interest rates. If the interest rates are super low, after you buying it, then actually you're going to have a positive MVA because bond prices will be higher. Yeah, that's kind of a good situation that we're in right now. So I'm just curious on the 20-year, see if we can see what this looks like for growth. It's a nice little curve there, growing from $500,000 to $1.3 million guaranteed. And you can see the interest earned. All right, so they're saying compounded. Yeah, they were saying compounded. What was that? Compounded 4.9. So never mind. So it's a step rate. That's what it is. Guaranteed yield to surrender, 4.9%. That's what they're guaranteeing. So you can see that's going up slowly. And the interest that it's earning starts low in the beginning, only $20,000 first year, and then slowly going up after that to, at the end of it, 5.65%. The last interest payment is $69,588. So the total interest earned is $801,000 during that 20-year period. So anyways, not bad. Really just depends on what your goals are. Index annuities typically will earn you a lot more than this. But they'll give you usually some type of withdrawal option as well. But yeah, that's a long time to have your money locked up. Anyways, that's why I don't really sell any of these. But if you're looking to have something that guarantees you a 4.9% yield to surrender for 20 years, then the Safe Haven by Atlantic Coast Life Insurance Company will do it for you. So anyways, options are really limitless. It really just depends on what you are looking for. If you want growth for 5 years or 10 years or longer, you can have it. Typically, most people that I meet with are usually putting money in for around 7 years. Sometimes a 5 or 6 years, sometimes a 10-year. But the spot, I don't know. I think the sweet spot's around 7 years right now because 5 years you don't get as much and you can't lock it in as long. 10 years feels too long for some people, and so 7 years kind of makes them feel good because they're getting the typically high rate. And at the same time, they're not locking it up for 10 years. So anyways, it really just depends on what you want. These change all the time. It really just depends on what's happening in the market and obviously what's happening with interest rates, bond prices, and all just fluctuates all the time. So if that's something you want to go over, if you want to look at this and you want to see what the earnings would look like for you and play with some numbers, then book a call. You'll notice that there is a link below this video and it goes straight to my calendar. And then we can chat. We can see what you're looking for, if it makes sense, and also, what flexibility you need with the money, as far as, being able to take some of it out during it or maybe even living off the interest. All depends on what you're looking for. So anyways, I'm happy to go over with you. I appreciate you watching this video and look forward to seeing you in the next one.